speaking of Fed rate cuts, I like that you mentioned that during the last Fed rate cut, interest rates spiked up for mortgages.
Mm-hmm.
That's happened the last few times.
Yep.
It seems like almost every single time Powell speaks, he scares the economy, and then we see the stock market react to that and also the mortgage market.
Yeah.
Because you got to think about it. Whenever people are fearful, they want to put their money in more safer investments.
Mm-hmm.
And then when people are feeling optimistic about the economy, they want to go more into the risky investments to get a bigger return. So it's kind of like a teeter-totter.
Yeah.
And what's interesting is federal interest rates control consumer credit like credit cards and car loans, but not mortgages. That's actually controlled by the US 10-year Treasury. And if you take a look for the last two federal rate cuts, right before interest rates were cut by the feds, we saw a huge improvement in pricing for interest rates for mortgages a week or two beforehand. And what usually happens is the mortgage market and the secondary market catches wind that there's going to be a Fed cut, and those improvements are already baked in before the Feds actually have their meeting and announce that cut. And that's why a lot of times I tell my clients the best time to buy a house in terms of interest rates and the best time to time the market, even though I don't like doing it, is right before the Federal Reserve meetings. And when there's a lot of optimism behind a Fed cut happening, usually 2 to 3 weeks before that, that's usually when interest rates are at their best point.